Welcome to the deep dive. Today, we're digging into Palantir Technologies and a pretty bold prediction about where it might be headed.
Yeah, a really bold one. Our source is an article from the Motley Fool called "One Wall Street Analyst Thinks Palantir Will Be a $1 trillion Company. Can it get there?"
Right. And our mission here, for you listening, is to really unpack the arguments in that piece. We want to understand the case for Palantir hitting $1 trillion, but also the big counter-arguments.
Exactly. Trying to cut through some of the noise around this company and this, frankly, huge market question.
Okay, so let's get into it. Palantir's recent story is pretty fascinating in itself, isn't it?
Oh, absolutely. The article kicks off by pointing out the stock's performance, almost a 2,000% return since the start of 2023. Just incredible.
I mean, that's a staggering number, and it reflects this big perception shift, right? From sort of slow growth, maybe unprofitable.
So suddenly being seen as this fast-growing, highly profitable tech player, big change.
And the article points to one main reason for that shift, doesn't it? The launch of their AIP.
That's right. The Artificial Intelligence Platform, or AIP. Think of it basically as an AI layer they've put on top of their core software, like Foundry and Gotham.
Okay, so it makes it easier for users to interact with all that data, using AI chatbots and things like that.
Exactly. It makes their powerful, sometimes complex data tools much more accessible. You can just ask questions, get insights more intuitively.
And clearly, that's hitting a nerve. The article mentions Palantir's market cap is already over $300 billion.
Yeah, making it the most valuable pure software company out there right now.
But still, $300 billion is a long way from $1 trillion.
A very long way. Which brings us to that prediction the article focuses on. There's one specific analyst who thinks they can bridge that gap pretty fast.
Right. The piece names Dan Ives from Wedbush, and his call is what? $1 trillion valuation in just 2 or 3 years?
That's the one. Pretty ambitious time frame.
So what's his reasoning, according to the article?
Well, the core of it seems to be his view that Palantir is, and I quote, leading when it comes to the AI revolution. He mentions things like the recent deal selling their Maven smart system to NATO.
Okay, so seeing them as a key player in AI.
Yeah, and it's worth noting, Ives is generally very bullish on the whole AI sector, not just Palantir.
The article says he recently raised his price target on Palantir too, right? From $120 up to $140.
He did, yeah, and kept his outperform rating. But here's where the article introduces some, let's say, skepticism.
Oh, okay. What's the catch?
Well, the author points out that while Ives is bullish, he didn't actually provide many specific financial calculations or a detailed model for how Palantir gets to that specific $1 trillion number.
So it's more based on the overall AI momentum and Palantir's position as a leader.
It seems that way, based on the article. More of a big-picture call on the trend and their role in it.
And that lack of specifics kind of leads into the main counter-argument the article's author, Jeremy Bowman, raises.
It's exactly. Bowman doesn't really argue against the business having potential. His big red flag is the valuation.
The price tag right now? Okay, what are the numbers there? The article mentions a price-to-sales ratio.
Yeah, a PS ratio of 105, which is, well, it's sky high.
105 times sales. What does that actually signal, according to the author?
It signals extreme expectations. As the author puts it, that's a level usually seen in, like, hyper-speculative growth stocks. It means the market isn't just expecting strong growth.
It's expecting perfection.
Pretty much. Near-perfect execution, continued dominance. There's basically no room for error priced in at that multiple. It's a huge risk factor.
So Bowman's argument is essentially great company potential, maybe, but the stock price already reflects more than that potential, making the $1 trillion target very difficult without massive risk.
Precisely. He even makes the point that if the PS ratio fell by 75%, a huge drop, the stock would still look expensive by historical standards.
Wow, okay. So that phrase, price to perfection, really sums up his concern.
It does. Any miss on earnings, any slowdown in growth, even just weakness in the wider economy or tech sector could theoretically hit the stock hard because the expectations are so incredibly high.
All right, so that's the bull versus bear on the valuation, but let's circle back to the actual business performance. The article does acknowledge Palantir's recent strength, doesn't it?
Oh, definitely. It concedes that the operational performance has been strong, points to 39% revenue growth in the most recent quarter reported.
39% growth, that's substantial. And the author notes if they kept up anything near that pace,
revenue could potentially almost triple in 3 years. which would be massive growth for the business itself.
And there are other positives for the underlying business mentioned too.
Yeah, the article touches on the scalability of their subscription software model. Once the platform's built, adding customers can be very profitable. Plus, they have a history of improving their operating margin over time.
So potential for bottom line growth as well as top line.
Exactly. More profit falling to the bottom line.
And then there's the government angle. The article brings up a New York Times report.
Right. That's another potential tailwind highlighted. The NYT reported that the previous administration significantly expanded the federal government's ties with Palantir.
And the government is their biggest customer.
By far. So that relationship is critical.
What did the NYT report specifically say about that expansion?
It mentioned a push, apparently linked to a government efficiency initiative, urging federal agencies to share data with each other using Palantir's platforms.
That sounds like it could embed them even deeper within government operations, almost like a mandate.
It certainly sounds like a strong encouragement, which could drive broader adoption across different agencies, a potentially significant tailwind for the business.
Okay, so if we synthesize those points, you've got the strong recent growth numbers, this increasing government reliance, plus the general AI demand. The article acknowledges the business prospects look pretty solid.
Yes. The source material definitely paints a picture of a business with strong momentum and favorable conditions, separate from the valuation question.
Right. So pulling this together for you, the listener, what we have here is this real tension. On one side, a company growing fast, seen as an AI leader with significant potential, fueling this very bullish analyst call.
And on the other side, this extremely high valuation, this PS of 105, which the article's author flags as a major risk, making that trillion-dollar goal seem, well, perhaps less probable, or at least much riskier.
So understanding a company like Palantir, especially now, isn't just about the tech or the growth rate, is it?
Not at all.
Yeah.
You absolutely have to look at how the market is valuing that potential today. This deep dive really shows you how two different perspectives can look at the same company, the same AI trend.
And come to very different conclusions depending on what they weigh more heavily, the future potential or the current price tag.
Yeah, the growth story versus the valuation risk. It's a classic dilemma in investing, especially with these big tech waves.
So the core question hangs there, based on this analysis. Can Palantir really hit that $1 trillion mark in the next couple of years?
The article lays out the forces clearly. You have the undeniable business momentum and AI leadership pushing the bull case forward,
Countered by that extreme valuation multiple that screams caution from the skeptical side.
It really does.
And this whole discussion around Palantir, it kind of highlights the challenge of valuing any company riding a massive trend like AI, doesn't it? It leaves you thinking.
Yeah, it really makes you wonder how much of that exciting future is already priced into the stock right now. What does price to perfection truly imply for investors looking at the journey ahead with all its potential bumps in the road?